Just pivoting off of the shorting Europe theme from Ray Dalio, is that your call, Ben?
We're neutral Europe. I mean, we haven't been particularly positive. We think there's a big earnings miss coming. Strong euro, higher bond yields, growth, gradually decelerating, and a positive earnings surprise is really the only way to make money in Europe. I mean, valuations are sort of where they should be. Sentiment has rebounded. All the money that left Europe in 2016 came back last year. And you've got these sort of macro headwinds building. So, we're neutral. We're not particularly positive.
Sarah, what's your take from a fundamental point of view?
I think the fundamentals still look pretty good across Europe. We're seeing very strong growth, very strong sentiment, easy monetary policy. Fiscal policy is supportive as well. Governments are no longer raising taxes and cutting spending, quite the reverse. So it looks like a very good fundamental backdrop. There are some concerns over the politics, particularly with the Italian elections coming up. Markets aren't paying too much attention to that, but we still think that there are some risks out there.
Well, and Sarah, we'll get to Italian elections in a second, but the other part of that story is also the stronger euro and what it does to earnings. You heard Ben sort of caution about potential earnings growth. How do you view that?
I think that we're still in a comfortable situation. Euro is stronger, but it's certainly not up above the 140 level that the European Central Bank starts to get worried about. We know that German exporters at these sorts of levels are still very competitive, and the confidence data, I think, particularly business climate indices, show that businesses don't worry about the current level of the euro. Now, it could go stronger, but as I say, I think it would have to go somewhat stronger before there were real concerns about the profitability of European countries, European companies.